Good morning, everybody. Hope you're well, and thanks for joining us on this second RegTech webinar of 2019. We're going to be covering Brexit. Yes, we're mentioning the B word. We're going to be completely agnostic. We're not getting political. It's all about really regulatory and business risks that are the key issues here. And as you'll see from the session, we're really focused on your clients and what your clients and your businesses are having to face going through this fairly tumultuous time, politically, socially, etc. So just a few housekeeping points for you. What I'd like to ensure is that you can hear me. Hopefully you can, and if you can't, you need to check your audio settings. So you need to basically going to the top left icon, which is the mic icon, check into that, make sure that your audio is connected, and then hopefully you can see the screen and also hear me. Today's agenda, sorry, just a quick point. If you can't hear me, call that number, because that will take you straight through to the webinar call system, and you'll be able to get online and hear me and hear what we're talking about today. Today's agenda is really all about understanding the risks and understanding how we can assess and manage those risks from a business development point of view and a client relationship point of view. The Brexit agenda has obviously taken its own entity at the moment with all that's going on a political front. But as mentioned, we're not really focused on that. What we're focused on is what the FCA are expecting. And they are expecting firms at all levels, whether they're based in the UK or EU, to take action. So we'll run through that. We'll take a look through what Brexit considerations you might be wanted to think about, with new rules coming through, for example, like the SMNCR, the Senior Managers Certification Regime, which we talked about last month. And talk about what, in essence is changing. Now, I think the most important thing to mention here is there are still lots of unknown unknowns, as Donald Rumsfeld talked about with the Iraq War. So we really don't quite know exactly how this is going to play out at all. But the most important thing with risk management is that we can take action and ensure that we've got systems, controls in place and strategies in place to take care of most of the key issues that are coming at us from a business and regulatory and client relationship piece. We'll then move on to talk about what we call client relational risk, and that's how your clients are dealing with this, because at the end of the day, there's lots of emotion out there. There may be some volatility in the markets coming through. So from that point of view, there's a whole piece around relationships with clients and how that can be factored in. We'll talk a bit about managing risks, and we'll talk a bit about project planning, and I'll take you through some resources, which is mainly what Model Office do, to give you an idea of how we help, not just obviously on Brexit, but on the whole spectrum, if you like, of regulation, strategy, planning, benchmarking, auditing, business development and people development pieces. So if we take a look at the timeline, why we're here, obviously we all know about the referendum. As I said, that's a separate issue. But the most important thing we're focused on is really what the Brexit updates are coming through from the FCA point of view and the regulatory point of view. The latest was entitled Brexit, What We Expect Firms and Other Regulated Persons to Do Now. So from that perspective, as I say, the FCA are expecting you, as you'll see for the next couple of slides, to get active, to know what's out there, know what the risks are, know what to expect from a regulatory point of view, and what they're expecting you to do, and how the landscape is changing really. We've obviously got the 29th of March coming through very shortly. Whether the Brexit can will be kicked down the road politically, we don't know, which might give us more time to plan. But at the end of the day, we need to obviously, with strategic planning in place, plan for the worst case scenario or the best case scenario, whichever way you look at it. But from that point of view, what we've got to look at is 29th of March. And we also got to look at a no-deal Brexit as well, and what that means from our point of view, in this industry and what our clients are experiencing as well. I mean, the FCA's approach to Brexit is effectively very hands-on. I mean, in June 2018, they published a Preparing for Brexit paper, and a few more consultations came through after that, which was really fundamentally looking at amendments to the handbook and binding what they call binding technical standards. But the FCA has updated its advice on numerous occasions now, and really they've also brought in what's called a temporary permissions regime in case of a hard Brexit, a no-deal Brexit, which was open, which, as you'll see, gives a safe harbour, if you like, for a period of time for firms so that they can plan and gain the permissions they need to gain as the Brexit transition period starts if there is a no-deal Brexit. Then really what we're talking about from the FCA's perspective is that, if you look at what they've published and the draft legislation that they're bringing through, they're looking to empower themselves. They're looking to empower the Bank of England, the PRA, the Prudential Regulation Authority, to make transitional provisions if the UK leaves without an agreement in place. The authority sets out on its website how it intends to use temporary transitional powers. And broadly, it's intended to ensure that firms and other regulated entities do not generally need to prepare now to meet the changes to any UK regulatory obligations that are connected to Brexit. It's providing, as I say, a safe harbour for firms, so they're not having to rush around and make knee-jerk reactions which can obviously have unintended consequences. So that's important to note. So there will be a temporary regime in place, and it also sets out areas where it will make transitional provisions. So in other words, the regulator will expect firms and other regulated persons to start preparing now to comply with any post-exit regulatory obligations. So some examples there. On the first instance, if a hard Brexit happens, firms can continue through a temporary period, which is looking at the moment like 3 years, and this is mainly EU businesses that do business into the UK. But obviously, if your firm touches the EU, if you've got clients abroad in the EU or whatever, then this will have an effect also. And then we've got the fact that for those firms that don't have a transitional provision at all, and it could be affecting existing regulations that have already come through, like MiFID II, transaction reporting regime, disclosure requirements. You need to be getting on with that anyway. I'm sure you know that. I'm sure you've got stuff in place, which is great. An interesting one is credit ratings agencies, and it's pretty much good practice there to use UK-based credit agencies as we move through this period, rather than rely on EU-based ones. Some other considerations that we need to look at really is that UK-based firms that only do business in the UK, may be affected by this. It will be limited, but they may well be affected by this. So again, it comes down to good risk and strategic planning in your business, and you need to be aware of all these issues and how they could potentially play out and affect your clients and your business. And your arrangements with, for example, third parties. If you're outsourcing to DFMs and they are taking some of their funds and re-domiciling funds inside the EU to remain in the EU, like for example, moving it to Dublin, there may be some tax considerations for you to look at, and so forth. So what we're looking at really is firms that are involved in the European Economic Area, and we're looking at also key issues around passporting. So passporting was effectively a harmonization of the markets, where with MiFID and MiFID II and the rest of it was basically firms who were based either in the EU or UK or wherever around the EEA. They could actually go and advise and basically distribute their products and services uniformly. But now we may move to an area of equivalence, which basically effectively means that in an equivalent regime, that we've got a scenario where the EU will look at the UK, for example, in a slightly different light and say effectively, okay, you are equivalent. There are a relevant amount of equivalence to our rules and regulations, which actually, to be honest, will be pretty much there because we've been mirroring each other for so long. So that may come into play, and that actually, if that does fully come into play, then that actually may be good news for a limited period of time, as we'll talk about in the next slide. But UK firms really, they need to be understanding how they touch the EEA, what data goes into the EEA and vice versa. We've got the GDPR, that's not going to change, so that's good. And if you've got GDPR in play, which I'm sure you all have as of May 29th last year, then that is all good and that's stable and that's not going to change at all. The bigger firms who are part of wider base, firms based in the EEA will be affected. That will affect, regulations coming through like the SMNCR, because they may need a senior management function who's head of an overseas branch, and that will obviously touch the UK and EEA operations. So again, that particular senior management function would need to factor in Brexit risks, and that will become part of their prescribed responsibilities, if you like, within that particular role. The other thing, really focusing on passporting and maybe a move to equivalence. The key issues with this is effectively equivalence is not as good, if you like, unfettered as passporting. Equivalence, it means that, as I say, the regime, the third-party regime, third-country regime is deemed equivalent to the EU, but the EU is under no obligations at all. They can revoke any agreement with a 30-day notice. It's fairly piecemeal, and if the UK were to be involved in equivalence, then they would need to maintain a limited ability to do deals worldwide. So it could have a fettered approach on what we're doing from that perspective as well. But all this is to be played out. There has been the view that a paper that came out by the Treasury talking about the move to equivalence, and so that's looking very, very much likely. And if we have a hard Brexit, then equivalence would probably much be the default position for now anyway. So I'd like now to really focus on your clients and take a look at what's going on out there. I used to be a wealth manager, and I was for 10 years an IFA. So hopefully I've got an idea of how to build a deep, meaningful relationship with clients. And the key issue here is, I think, as an IFA, a financial planner, a wealth manager, you're all very, very well placed to actually see your clients through this type of disruptive time, as long as I'm sure you are, is that you're able to manage what we call the relational risk piece. It's a very soft skill orientated area. It's about emotional intelligence. It's about empathy, and it's about understanding, putting yourselves into your client's shoes. Some of you may have clients in the EU who are expats who've retired there. I used to have a fair amount of EU-based clients, and from that side of things, they may feel, slightly concerned or more concerned about their current position. So there's a whole piece there around how you engage them, what you need to do, what you need to be saying. And it's all about reassurance at the end of the day. And it's all about, taking a deep dive conversation with them, if you like, getting underneath, as you can see here from the diagram, getting into the key emotionally driven, centered areas of their decision making, so that you can put them at ease, so that they know that they're in the right environment, investment environment. It's going to be managed in the best possible way, and they're not going to, take a knee-jerk reaction, if you like, to what's going on and throw the baby out with the bathwater. So this is all really good core stuff around how you're engaging your clients, and this slide really focuses on why that's important, because even though you might have really deep, meaningful relationships with your clients, and they get the portfolios that they're in, and you've got their informed consent around the risk management piece and the rest of it. The other thing to mention on this is that as markets become volatile, as you can see in the red areas here. So this is a Barclays view on MSCI World Equity Annualized Returns. We've used this slide for over the last 5 years, and I think it's a great slide because it just emphasizes the point about the fact that if clients stuck with their investment portfolios, there were no nominal losses over a period of 12 years or more. But the problem that we've got is risk aversion and biases and the rest of it. So unfortunately, people tend to live in what we call the zone of anxiety, and that is when things get tough. We have turbulent, volatile market conditions coming through, which Brexit may certainly bring. We've also got the devaluation potential of the currency issues, and all that is unsettling for clients. You've got business issues with for example, the issue with Swindon and the Japanese car manufacturing firm pulling out. So even though that wasn't Brexit driven, you've still got a lot of unsettling stuff going on at the moment that they've got to deal with. And from that perspective, what we need to be mindful of is that at some levels, they may actually go back and live in this zone of anxiety. So that's where we as financial professionals need to really ensure that we've got a seamless, streamlined strategy in place to cater for all this turbulence and unsettling information that they may be given. And so really, what are the consequences? Well, we don't know what the consequences are. At the end of the day, we don't know what we don't know, but what we can do is speculate at the moment. And, at the moment, we're in lower annuity rates scenario that may well continue for a period. We've got lower interest rates. Interest rates, again, have been put on hold. So we don't know where interest rates may go. They're certainly on the upward trend, but with uncertainty coming through and with trade deals, big question mark at the moment, worldwide trade deals, then interest rates may actually stay at a lower rate. So that may not change. Passporting we've talked about. We've got the whole issue around what the regulators are up to, and the good news is that the regulator is pretty much on the industry side in the sense of a temporary permissions regime, which they're bringing through to build this safe harbour, if you like, so that EU-based firms who are over here working and doing business here but will not have to immediately leave, but they can actually take their time to get the right permissions, and vice versa. So the opportunities really for you as industry professionals, it's really to espouse the value of what you do even further. It's the planning, it's the advice, it's the coaching. It's, as I say, it's the understanding of the client's emotional centers. It's gaining that empathy, putting yourselves in their shoes, making sure you've got the full issues sorted from that point of view, which we'll talk about in a little while. And really, it's ensuring that you've also got their investment proposition set in the right way. So from that perspective, we're really talking about, if you're outsourcing, making sure all the research and due diligence and your investment committees document all that, and that can be used at any time to discuss with your clients about the evidence-based processes that you're using. It's espousing your professional services that you showcase to them, and it's communicating that in a very clear way. Which is important to do. So it's all about a massive reassurance exercise that we would recommend really that you start to focus on over the next few months, so that clients are reassured that they are comfortable with your strategy and towards Brexit and the potential volatility that can come their way and our way with what will happen over the next month or so. So when we go to managing risk, this is something that we always talk about, which is the 5 key questions, if you like, that the regulator have recommended that firms look at for managing conduct risk in particular. But this is looking at identification of the risks up front. So here we've got to really focus on what are the risks that are coming down the line with Brexit. And it could be issues around shaking the foundations of the informed consent that we've got from our clients. and going back to those clients and reassuring them that they are in the right place with the right portfolio, with the right fund management expertise, with the right taxation strategies, and so forth. So we need to identify them up front. Then we need to look at individual accountability, that we're all up to speed on how the risk is going to be managed. And that could be looking at, well, what's the communication message that we're going to give our clients on a consistent basis over the next period to make sure that they're comfortable and they're going to stay in their seats as markets may get more volatile. We've then got to look at any mechanisms to improve risk management within the business. It could be training. You could run a Brexit session on all these key issues if you wanted to with your key staff members to look at what the potential challenges and opportunities are with Brexit, because I'm sure there will come a silver lining with Brexit. With investment opportunities as Brexit clouds start to shift. So that, I think, is important to look at as well. Looking at your board or your investment committees really is important to make sure that Brexit is on the agenda. Don't assume that it's all going to be fine and it's other people who have to deal with it, like, for example, the outsourced DFM service or professional management service that you're using. At the end of the day, it's about your accountabilities. So make sure that you own it and that you know as a group what the message is and how you're conveying that message within the group and within the business and to your clients. And really also looking at any activities that can undermine good risk management, any communications that aren't helpful that you're putting out to clients, any clients that you're not reaching and you need to reach with a message, with a review or whatever it would be. So all that is good risk management strategy that you could employ around Brexit. Project planning, well, we are at Model Office very keen for you not to be using checklist tick box strategies. We were very much about, looking at your tasks in a far more action orientated way, a more holistic way, building a balanced scorecard across your business to make sure everything's interrelated. As we've already talked about, MiFID II has a play in Brexit, SMCR has a play in Brexit. So at the end of the day, you need to know how this all fits together. So here are kind of 9 key areas that you might want to focus on. And this is fully recorded, so we'll send this out to you once it's up on our YouTube RegTech channel, so that you can review it again at your leisure. But these 9 key areas really do focus on the important aspects of how to plan, what to look at, what processes you might want to factor in, client communication planning, looking at any exposure that you've got as a business, looking at your outsourcing and who you're outsourced to and how that's going to be affected. It could be affecting mandates and legal contracts, for example, with investment houses moving into the EU. So again, that's something you might want to look at and talk to them about, identifying any documentations that need to change, any T's and C's that need to change. We've mentioned MiFID II, information disclosure issues. I'm sure you're on that anyway. Reviewing counterparty risks, outsourced suppliers we've talked about, researching due diligence around them. There's a whole issue about recording data in the EU, which is an FCA requirement. Is that going to change to in the UK? We don't know yet. So again, that's something you might want to put on your radar and ensure that risks across employees and any European Economic Area outsourcing is catered for as well, if that's what you're involved in. So moving to us, what we do, we have a diagnostic that effectively looks at all the regulations, all the risks, all the challenges, all the government policies that are coming through from a business and a people development point of view and a client relationship point of view. So it really is benchmarking where you are against all the rules and regulations and all these policies that are coming through and affecting you so that you can self-audit. And this is an example on Brexit, for example, in the risk management section. In the Your Focus key, we have 5 key areas for your business to focus on, which is about your focus, compliance, your engagement, how you're engaging your clients and stakeholders, your promises, your service proposition, your systems is your back office and middle office, and your business management, client relationship management and data management technologies. And then your people is all about how you're managing your people. So there you will be focused on training and development, for example, and training and competence. around key areas on Brexit. You answer a suite of questions, and then you get a dashboard which is heat mapped so that we know and you know what you need to focus on first and foremost, and you can get on with that. And as you can see at the top, you've got scores which are benchmarked against the industry benchmark, so you can really assess where you are against your peers, but also assess where you are against all the rules, the regulations, the regulatory papers that come out, the good practice that the FCA want to see. And Brexit is factored into that particular section in risk management. And then what with the system will do, the algorithm will kick out lots of steers, lots of tailored tasks, lots of resources and templates for you to get on with, so that you know what to do next to improve your scores and make sure you're highly compliant, client-centric and sustainable as a professional practice. And finally, but not least, we've got a guide which will be coming out very shortly, which will send out to you for as you kindly spent half an hour with us today. We'll get that guide out to you once it's ready, which should be early March, and you can sign up for it already. So I'll send that out to you if you're interested, and if you know anybody else is interested, they can sign up to it. All our guides really cover all the key government policy and regulatory policy issues. So we've also got a suite of guides coming out on the SM&CR. The first is due out next week. And we've got 5 of those guides which cover all the key issues around the SM&CR and give you some practical tips about project planning and implementation and business as usual. But this particular guide is all about what we've really talked about here on those 9 key areas of project planning and what you need to look out for regarding Brexit. So thanks so much for your time. We're going to finish a little bit early today. If you have any questions, any queries on anything regarding RegTech, on Brexit, on anything such as the SM&CR, MiFID II, IDD, suitability rules and the rest of it, or you're interested in Model Office, we'd be happy to give you a demo, completely complimentary. But we will be sending out the recording of this later on today, and you will get the paper as well, link as well, so you can link in and express your interest in the paper. So have a wonderful Friday and a wonderful weekend, and thanks so much for joining us today.